Hey guys, welcome back to another video. In this video, I'm going to be talking about two stocks that have completely dominated the market over the last year. They're both oil stocks and they are DVN Energy and Occidental Petroleum. As we can see, OXY or Occidental Petroleum is up 138% over the last year, and DVN Energy is up 117%. And this is both happening in the same year that the S&P 500 is down an overall 8%. And many of my viewers who have been keeping up with the news recently might have also noticed that with Occidental Petroleum, Warren Buffett has been buying a ton of OXY over the last few weeks. We can see right here, Berkshire Hathaway owns 18.7% of Occidental after $12 million share repurchase. If I scroll down a little bit here, they talk about how on Thursday they announced they bought another 12 million shares, and also last week they bought another 9.9 million shares. So that might be contributing to some of the recent price upticks in OXY, but definitely over the last year we can see that they've been completely dominating, as well as DVN Energy. So in this video, I'm just going to do an intrinsic value analysis of both of these stocks by looking into their financial statements for their most recent quarterly earnings reports. And then I'm also going to do an intrinsic value analysis using a discounted cash flow model in Microsoft Excel to figure out what a good buying price would be to buy into these two stocks from a value investing perspective. So first off is DVN Energy, and we can see right here, this is their income statement for their first quarter of 2022, and they're comparing that to the first quarter of 2021, as we can see right here. And their total revenues for the first quarter of 2022 came out to be $3.8 billion, which is up from $2 billion year over year. And we can also see that their net income increased pretty substantially from about $200 million to about $1 billion year over year. So that's an increase of about 5 times what they had in the first quarter of 2021. Then on top of that, we can see that their earnings per share came out to be about $1.48 per share, which is up from only 32 cents per share in the first quarter of 2021. So a lot of growth for DVN Energy over the last year or so. Then we can see right here from their consolidated statement of cash flows that their cash flows from operating activities increased from about $590 million to $1.8 billion in the first quarter of 2022. And we can also see that they've been returning a ton of value back to their shareholders. They repurchased about $211 million of common stock, and they paid out dividends of about $667 million back to their shareholders. So they used up a total of about $1 billion in financing activities compared to the $800 million that they used in the first quarter of 2021. But that was primarily used for repayments of long-term debt, as opposed to this quarter where they were mainly just returning value back to shareholders. And then we can see right here in their balance sheet, their total assets come out to be about $21 billion. It stayed pretty consistent quarter to quarter here. And then we can also see that the majority of their business is financed by debt as opposed to equity. They have about $9.4 billion worth of total equity over their total $21 billion of liabilities and equity. So they have about $12 billion of total liabilities. So obviously, due to that, they're going to be paying a little bit more money on interest payments, which is obviously going to eat into their cash flows in the short run. And so right here, we can see from this intrinsic value analysis that I put together in Microsoft Excel, these estimates I got from Yahoo Finance, and analysts are basically estimating that for DVN Energy, they believe that it's going to grow at a rate of about 21% compounded annually for the next 5 years. And so I was conservative for the next 5 years after that, and I just put it down to 10%. They had about $2.89 billion of free cash flow in 2021. Right now, if we net their cash against their total debt, they have about $4.28 billion worth of debt, and they have about 660 million shares outstanding. And so with those metrics in mind, we can see that the intrinsic value per share is estimated to be about $107 per share, with a 30% margin of safety of 75 and a 50% margin of safety of 53, which compared to their current share price means that they're trading at around a 50% margin of safety right now. So that, coupled with the fact that their share prices increased by about 100% over the last year, and with that said, they're still trading at a 50% margin of safety, and we saw all of that massive growth from their income statement. it looks like Devon Energy could be presenting a pretty strong buying opportunity right now. And so let's compare that to one of their main competitors, Occidental Petroleum, which is obviously the stock that Warren Buffett has been buying up a lot of recently with Berkshire Hathaway. So right here we can see from the balance sheet for OXY that their total assets come out to be about $74 billion, which is down from about $75 billion in the previous quarter. And we can also see that their stockholders' equity comes out to be about $24.9 billion, which is an increase from $20 billion in the previous quarter. So the majority of their business is also financed by liabilities as opposed to equity, similar to Devon Energy. But we can also see something interesting here, which is that their total stockholders' equity has increased primarily as a result of an increase in retained earnings. We can see that retained earnings has increased from $4.4 billion to $9 billion, so it's pretty much doubled in just one quarter, basically. So that's pretty interesting to see. It means that their business is growing, and they're definitely experiencing growth as a result of cash flows from their operating activities, as opposed to if they were just issuing common stock to grow their equity, which would have diluted shareholders. Also, you can see right here in their income statement that their total revenue for the first quarter of 2022 was about $8.5 billion, which is up from $5.4 billion just 1 year ago. And then if I scroll down here, we can see that their net income attributable to common shareholders came out to be about $4.6 billion, which is up from a net loss of $340 million 1 year ago. So they went from pretty much being $300 million in the hole, not profitable, to netting about $4.6 billion worth of profits just 1 year later. We can also see that their earnings per share was about $4.65 per share if we include their diluted common shares, and that's up from only 10 cents 1 year ago. So enormous growth for OXY, similar to DVN. And if I scroll down here to their consolidated statement of cash flows, we can see that they had a pretty big jump in their net cash provided by operating activities from about $900 million to $3.2 billion. And then on top of that, we can see that although they have a lot of debt sitting on their balance sheet, they actually repaid a lot of their debt in the first quarter of 2022. They repaid about $3.3 billion worth of debt, which represented 12% of their total outstanding principal prior to them repaying this. So they're definitely trying to eat away at the debt so that they don't have to continue paying money on these interest payments, which is eating into their cash flows. On top of that, we can see that they repurchased about $36 million worth of common stock, and they also paid out about $216 million worth of dividends. And also, did I cover everything? Yes, I think I covered everything for that. So now I want to go into their intrinsic value per share here before we do the quick competitor analysis. And we can see that analysts are expecting OXY to grow at about 23% compounded annually. And so with these metrics in mind, we can see that the intrinsic value per share for OXY is about $200 per share, with a 30% margin of safety of 140 and a 50% margin of safety of 100, which means that OXY is pretty much trading well below a 50% margin of safety at the moment, despite the fact that they're up about 140% over the last year. So they're up a little bit more than Devon Energy, and they're trading at an even lower price relative to their intrinsic value in comparison to Devon Energy. So that's very interesting to see. And so now, just to finish off the video, what I want to do is do a quick little competitor analysis here, which I put together on the right side here. And we can see, let me zoom in a little bit here. If we compare the two businesses together against each other, we can see that Devon Energy pretty much beats out OXY in terms of business efficiency on all levels. They have a greater gross profit margin at 38% just about compared to OXY's 29%. They have a greater net profit margin at about 20% compared to OXY's 10 to 11%. And they have a greater return on assets of about 18% compared to OXY's only about 3%. So pretty interesting to see that Devon Energy's business, according to their ratios, is definitely a little bit more efficient. But that being said, we can see that from this intrinsic value analysis, it seems like OXY is trading at a much better price relative to their current trading price than Devon Energy is. But then again, that being said, on top of that, we could see that both Devon Energy and OXY are both trading at a 50% margin of safety or below a 50% margin of safety relative to their intrinsic value. So it looks like both of these stocks have completely beaten out the market, and they're pretty much dominating in their industries right now. Both have great efficiency, and they've been increasing their profits and their cash flows over the last year. Pretty easy to see why Warren Buffett is really interested in buying into OXY in particular, now one of the largest shareholders there. But I would definitely love to know what everyone watching this video thinks about OXY and Devon Energy. Are they a buy or a pass right now? Definitely let me know in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.